So, good morning and welcome to our second panel today. We will be looking at protection gaps, as is the topic of today's overall conference. But more importantly, we will be looking to address why do we have these protection gaps and what can we do to close them. I am joined here on the panel by very competent and also very engaged speakers. So before I start with my introduction, I start ladies first and in alphabetical order. Iona Bain, she is a finfluencer, a money blogger, a broadcaster, a financial journalist, and she will help us to understand, where is the young generation when it comes to closing protection gaps, when it comes to understanding risks, and how can we address this. Moving on to Claudia Donzelmann on my left-hand side. She is the Global Head of Regulatory and Public Affairs of a company that doesn't need any introduction, Allianz Group. And to her left is Petra Hielkema. Petra is the chairwoman of the European Insurance and Occupational Pension Authority. Petra, thank you very much also for being here. And last but not least, we are joined by Director Cameron, Dean Cameron. He is the president of the National Association of Insurance Commissioners. You came the longest way from the US. But Commissioner Cameron is also the director of the Idaho Department of Insurance. So a very warm welcome. I would like to maybe start by saying when we pre-discussed the panel, I had a conversation with Petra and she told me, I'm very happy that we have these very different views on the issue on the panel, but I'm also happy that we have two supervisors on the panel, one that can give the European perspective and one that can give the US perspective. And what I also liked what she said is, it's nice that you have invited Dean because he ensures diversity on our panel. So very warm welcome. And very happy that you also, felt very happy to join this female group of speakers. Now, where are we when we talk about protection gaps? Certainly, let me maybe make an introduction first from an insurance standpoint. When we looked at protection gaps over recent years, we had the feeling as the insurance sector that we managed to become better and better in providing insurance solutions, that we managed to close the protection gap. And now we feel we are a little bit at the crossroads. We have heard all morning, we have challenges, obviously, pandemic, the war, but climate change, one of the biggest challenges. And what we also heard from many of the speakers earlier on, solutions are probably not only be found in the insurance sector alone. It's something where we need to work together. In my day job as Director General of Insurance Europe, I'm doing a lot of outreach also to consumer associations, regularly engaging with them. And all my recent conversations with them were around concerns that insurance will become a scarcer product, and also it might become pricier. So these are things that are now on everybody's mind, and I hope we can tackle some of these issues. We want to look at the solutions that the insurance sector can bring. We want to look at the role digital can play in helping us closing the gap. We also want to maybe address barriers that we are currently perceive. So without further ado, I think I get started, and my first question goes directly to Petra. Petra, from a supervisory perspective, how or what would you identify as the main barriers to purchasing insurance products in the EU?
Yes. Thank you, Michaela. Thank you, Insurance Europe, for having me here today. It's really great to finally meet so many familiar faces, digital, in person, looking even better in person, I might say as well. So that is very important to me, and I think that is something I'll come back to. Having a person and trusting, or at least being able to talk to the person, is very important when you buy insurance, and this is key in a digital time. Now, why don't they buy? I think they do buy, but maybe they should buy more. And this is a question that came up, I think, in the last couple of months many times, when it was during COVID with travel insurance or with business interruption, whether it was with the flooding or with drought that we're seeing, it's now popping up in cyber. So it's a very relevant question. And I think it starts with first considering that we cannot give one answer or even one solution for the entire European market. It differs. It's how developed is the market, how much penetration is there. So I think that's the first. Second, and if we look at it, and we did it through several angles, but the angle I want to touch upon is a pilot we are doing together with industry, actually volunteering to work with us on the insurance coverage of the flooding that took place last year in Europe, where only around 35% was covered by insurance, so there was cover. And part of that pilot is a behavioral study, and we looked at what consumers are, and what is it, why didn't they buy, why would they buy in the future? And we will publish it in summer, but preliminary, what we see is a few points that are very important. On how you offer products, I think it is very important to really look at, do people understand what they get the insurance for? If you talk about gaps, there is an expectation gap. There is an idea of I'm insured, and actually as the damage is there, it turns out you're not. And that creates disappointment, that impacts on trust. So having test panels, probably through a digital and a non-digital route, to really see, do customers get the right message when they buy this product, I think will be key. More on the demand side, when you look at consumers, what do they indicate when they look at insurance or maybe decide not to buy? The first one that comes up is affordability. Price is important. But to me, that is linked to another point that comes up, and that's their perception of the risk. So it's, do they understand they run a risk? And if they do understand, do they prioritize their risk in their financial budget to something they need to insure for? Now, if you ask what can we do, I think here is indeed a possibility also for, I think also for regulators and policyholders, and insurance to really explain that this is a risk and you need to insure for it, also to keep it insurable. Finally, what you see is it's very much related to also social culture. So what are people used to insurance? What do your parents do? So that's relevant. But more and more also, so I'm happy Iona's on the panel, finfluencers start having a role. And that finally has to do with trust, with meeting in person, or at least meeting a person, because finfluencers are digital, but still to a new generation, they feel like someone they can trust. But much of the respondents in our research say that they very much base the choice of what they insure for and where they do that on the experience of others they trust. So I think this is key, and I think this is something to consider when moving forward, because I do think that there are gaps where people would like to insure, and sometimes the insurance is not there, but where the insurance is there, we actually need more people to step in to keep it insurable.
Thank you very much. I have just a question to my panelists. Are you getting the same echo that I'm getting? Because I'm hearing you. No, you are fine. Okay, then it's maybe me. But what I have understood, Petra, is apart from the fact that I don't see you because I have the lamp also in my face, awareness is a key issue. Then the trust that you are talking about is a key issue, and how can we increase it, and what can we do ultimately also is probably to increase understanding as a trust building measure. We come later maybe to the point to what extent regulation helps us in really doing this, but before we go there, maybe I turn directly to Iona, because she is certainly also someone with her ear on the ground. Iona, from your perspective, how would you address the challenge?
So Young people think that they're invincible and that they're probably going to live forever. And young people maybe don't come to the realization that actually they're mere mortals until a little further on in life, when they've had some experience, when they're a bit older and wiser, maybe their metabolism has slowed down, the hangover that they could shake off in an hour has now ruined their weekend, and that's the point when they start taking their health more seriously, and their finances as well more seriously. Either that, or they have a serious mental or physical health crisis, or someone they know has that crisis, and then that's the wake-up call. The problem for the insurance industry is that it cannot artificially force young people to adopt that mindset. It cannot force young people to engage with that question of what will happen to your finances if you don't have protection in place. Because young people, when they are in their late teens, early 20s, and even late 20s, don't believe those risks exist. And to be fair to them, at that age, the risks are fairly low. So it just does not correspond with their lived experience. And therefore, that calls for, I think, quite a radical rethink of how we talk to younger customers about insurance. And I think the other problem is that in my market, the UK, you cannot have this conversation without considering the role of housing. So thanks to a policy called Right to Buy that was introduced by Margaret Thatcher in the 1980s, we have seen a massive decline in home ownership among younger people in the UK, partly because state-funded property was taken out of the system and not replaced, and also we've had quantitative easing, which has pushed up asset prices and means that housing is very expensive. So young people are getting on the housing ladder at a later age, but that's typically the point when they would have gone to an insurance broker or gone to a mortgage broker and talked to them about their insurance needs. If they're not having that conversation at an early stage in their lives, or maybe not having that conversation at all because they're never getting on the housing ladder, how do you reach that market? And it's a question that I think certainly the UK insurance industry really needs to engage with, and it's possibly relevant in other countries as well. So I'd say that what doesn't work is frightening people into taking out insurance, saying to young people, have you ever thought about what might happen if you were struck down by a serious illness? What would happen to your finances? Most young people would say, no, I haven't. Why should I? I'm healthy, I'm active, things are going well in my life, and I'll take care of it. So, what's the problem? So already you're on the back foot because the person you're engaging with does not accept the premise of the question that you're asking. And the problem is it's that question that's embedded in all the marketing that I see coming out of the insurance industry, certainly in the UK. Maybe not all marketing, but most marketing that I've seen. And frightening people doesn't work because it often invites a backlash. So I've seen advertising in the UK that's talked about, whether or not it's responsible to have insurance in place. But the upshot of that is you're implying people are not responsible if they don't have it in place. And of course, people will be very upset and offended by that because they don't want to think of themselves as irresponsible, especially if they have family. And also, what doesn't work is relying on those traditional points in a young person's life when they would buy insurance. Maybe that worked in the 80s, 90s, and 2000s when young people were getting on the housing ladder at a relatively early age. It doesn't work anymore. And it doesn't work when more and more young people are renting. So what does work? Well, I think changing the language around protection. So in the UK, protection products are given names like critical illness cover and income protection. Now, critical illness, it sounds very scary, and income protection sounds very boring, and neither are particularly ideal when you're trying to talk to young people about insurance. Whereas some insurers are talking about a rent protection plan. That's far better because, first of all, you're talking about rent, and young people clock that because rent is a big expense in their life, and they are genuinely worried about what would happen if they couldn't pay their rent. And it also has the word plan in it. And I think even young people who are kind of, living day to day and being quite happy-go-lucky, they still like to have plans. And it still implies that if you take out this product, what you're buying is peace of mind, because that's the ultimate product that you're actually selling. You're not necessarily selling, well, you are obviously selling the insurance that will pay out when something goes wrong. But we know that because the likelihood of you being able to claim that when you're young is low, what you're selling for that market instead is peace of mind. That would be far more powerful to emphasize rather than the payout if everything goes horribly wrong in your life. That's just a very negative message that young people don't want to hear. And finally, I think that humor would go a long way. Now, of course, you don't want to trivialize serious illness. You don't want to trivialize serious problems like floods, war, things like that. You have to tread a very fine line. But I do think that having this very heavy, serious message around insurance just does not resonate with young people who are spending so much time online, sharing GIFs and memes and pop culture references, and having quite a light-hearted view on life. I think the insurance industry could maybe tap into that and do more to incorporate that light-hearted message into their advertising. And of course, influencers can play a part in that. We'll come on to why they can be both an opportunity and a threat later. But I think that you can employ, the most accessible and appealing influencers in the world. But if you have not got the fundamental marketing right and you don't understand that young market, it'll all be in vain.
Very interesting. So really what you are asking is a change of paradigm in a way we approach the young generation.
Yeah.
We talk about the product and we try to explain it also. Let's move to the US to see, Dean, from your perspective, does this resonate with you, the analysis we heard from Petra and now also Iona?
Yeah, first of all, thank you for the invitation of being here, and I'm happy to be the thorn amongst these roses anytime you need. I think it's a wonderful question, and it's not a question that's unique to Europe or the UK, or it's a problem across the world. Things have changed dramatically. There are lots of barriers. It is a high priority for the NAIC to lay the barriers out on the table, so to speak, that are keeping people from being able to access coverage and try and figure out ways to mitigate or work around those barriers. And so I find the whole conference that you're holding very intriguing because it's starting to talk about what are those barriers. We believe, certainly I believe, and we didn't go much into my background, but I'm a third generation agent or intermediary. My father was, my grandfather was. I've had the fortunate and yet unfortunate experience of having to deliver multiple death claim checks to grandparents who are now parents again because their child or their daughter and son-in-law passed away in a tragic car accident. Now they're raising these children and needing the finances to do so. Unfortunately, insurance was in place. Lots of experience that way. And so I come at it from a perspective of understanding the benefits to coverage, and certainly that's somewhat of what you're talking about, is the younger generation of today doesn't necessarily understand all of the benefits that are there. So maybe it's incumbent upon us to be able to help explain the need for coverage a little more. I do think there are other barriers. First of all, I personally believe citizens are better when they have coverage. The economy's better when there's adequate coverage. Businesses are able to take on risk. Individuals are able to take on risk when they can cede that risk to insurance carriers. But there are, besides the understanding of the barriers, the issue is also affordability, and so it's a balance between government decisions that cause rates to be higher in the effort of protecting consumers, at the same time create a barrier for which that consumer can't access coverage. A common one that we talk about a lot, I heard already this morning, was technology and the use of technology. That could be a blessing, if you will, in helping reduce costs. It could also create a barrier, depending on how it's done, and depending on the regulations that we in the regulatory community or government imposes upon that technology. That could potentially be an issue. I'm biased and have a belief in the agent system. I believe consumers are better protected when they meet with an agent. And I think it's a wonderful career, and we'll talk a little bit about that maybe later, but it's a wonderful career for citizens to be able to involve themselves in and helping market, if you will, or helping explain to consumers the overall need for coverage. I do think financial education is a large component, and we as regulators, as government, have a responsibility to make sure that appropriate financial education is out there. I'm sure like you, see lots of advertisements that aren't always keeping in that realm, and so it's part of our job to make sure that advertising or that information is appropriate and is explaining things appropriately. But I think we also, one of the things we've been working on at the NAIC this year, as we have taken on sort of the diversity and the race and insurance component, is how do we make sure that we're communicating in the language the person is hearing in. The younger generation obviously loves the idea of applications and the opportunity to buy coverage online or through an app system. But that system also isn't very adept in the myriads of pages of disclosures that insurance comes with, that have been regulated over the years and added to. And so I think there's some really tough conversations that have to be added there, and we have to, we had a meeting of the NAIC not too long ago, and they had some folks from the indigenous tribes speaking to us about how they viewed insurance. And much like what you were saying, they didn't find the need for it. But when we flipped how we talked about it, it changed their perspective of how insurance could impact their lives. The last thing that I guess I would say is that we have focused a lot on access through our race and diversity program, and trying to make sure that everybody, regardless of their race, their ethnicity, their gender, has access to coverage. And there have been times in our history, unfortunately, where that's not been the case. And so I think we're working very diligently in that effort, trying to find those solutions. We also have established a foundation. It's in the process of being established, but the NAIC has voted on it, supported it, donating money, and now we're getting approval of our Internal Revenue Service for tax deductible donations. And the important part is that foundation is going to be used to help people who want to engage in the insurance industry, who want to be regulators, actuaries, examiners, or want to be involved in the industry or the regulatory community. We intend on issuing scholarships, apprenticeships, internships that will help students have a career in the industry and be able to be successful in this wonderful arena.
Yeah. You really touched again upon multiple triggers that we can, in the end, I think, probably successfully use. Certainly, this personal dimension that you mentioned with the engagement through intermediaries, you yourself have experienced that. The change of language again, the education, the way we talk about the product. I must say, when I came into this industry 15 years ago, you come a little bit with this idea about insurance, and within the first year you learn that insurance is so much more than what you thought ignorantly before, and how rich it is and how it weaves through all parts of our society and really provides help and protection. And to bring this across is really the challenge, and financial education clearly is also a key piece that could help us on the way. You mentioned also the role of regulation. We come to that in a minute, but before that, I also want to give Claudia a chance. I mean, you work in a company globally, that is globally active. You know the EU, the US, and the broader global dimension. How do you see it from the company perspective? And maybe it would also be interesting if you could tell us, have you noted changes now recently, even, COVID-related? Do you mark any differences?
Yes, thank you for having me, Michaela, and thank you for having me in particular on this diverse panel. And now I don't mean gender related, but with regard to stakeholder groups. And that is very, very important, I think, and it's the first step to finding solutions to kind of the challenges we are talking about. So if we don't sit together across stakeholder groups and in a trusted way and try to find solutions that work for everybody, we will not get there. So that is important that we have consumer representatives, supervisory representatives, and then the industry to find solutions together. And the goal shouldn't be to kind of throw the major part of the risk over the fence to the other part, but really work together. So it's not about I take this one and you take this one, it's kind of what we do together. So coming to your question, do I see that kind of the protection needs have increased, or kind of the perspective of consumers? Definitely and massively. And as an industry, it is important for us to understand, so how did these needs change and why? And the main reason why is so clear after COVID, because COVID is such a massive and extreme event that it doesn't only trigger one concern. So if I have a flood, I look into my flood insurance. If I have health issues, it's my health insurance. The pandemic is so broad that we are dealing with many different protection needs, and this is why the increase is so massive. So we kind of did a lot of research in the industry internationally, and kind of see there are concerns on the consumer side about health, about the private financial situation. Businesses, we all know, and that was hugely in the press, it's business interruption, but it's also, do I need to lay off employees? So there are so many different concerns that they kind of sum up. So what then was done, and that was done together with the Geneva Association as an international kind of association on the insurance side, to better understand. So kind of, did the protection needs increase? Did that lead to the plan to buy and purchase more insurance? And then did they effectively purchase? And that is really interesting. It was run across 8 markets, 4 European markets included, and it was primarily on the consumer side. Some small businesses included there. Results super interesting. So coming to the protection need, 1/3 of respondents said that they have a higher protection need. But only of these 1/3, only 50% then said they plan to purchase. And then think about it, you're not yet there when the customer says, or the consumer, I plan to purchase. If we want to close the protection gap, they need to purchase. And kind of it triggers down and it gets smaller and smaller. And then we also looked into what are the reasons. So what are the key barriers? Because this is where we need to get, this is where we need to start with the solutions. And the main barrier, and that is really, really interesting, is other priorities are more important. And that is something that you need to digest, because it's really, really hard to dig into. And Iona, that is so much to what you said, kind of consumers need to understand, and in particular younger consumers. So it's important kind of to have discussions around what can we do to make insurance more attractive. And I mean, attractiveness is not there because we are dealing with risk. And if I can decide I buy a new car, or I go on vacation, or I buy a handbag, that's probably more appealing than buying insurance. So this is where we need to start. Second thing, also very important, so second reason as a barrier to really actually purchase in this study was trust in insurers. And this is where we are kicking in. And we discussed this very often, and we were very transparent. If we run into this situation like we had in the pandemic, that the customer is surprised that he is not covered, then we need to be more transparent and need to be better kind of in explaining upfront. Now, the challenge with the pandemic was, did anybody expect a pandemic? And then did anybody expect that governments will take decisions for broader lockdowns? I mean, no one did that. It's a black swan. No one had that on their radar. But overall, we have other topics like cyber, where we know now cyber risk and extreme events will come. It's a question of time. How can we make clear to customer what is protected and what is not? Because we need this. Because if the customer doesn't trust in us, we will not get there to closing the protection gap. So therefore, the question to your answer, yes, a very much increased awareness of the protection needs on the consumer side. Very quickly to kind of governments, we just heard it in the keynote speech. And it's the same, and we need to work together with policymakers, because due to the extreme extent of these events, we need to work together, because there is a limit for private insurance, and if we don't work together, we will not get to where we want to be.
Yeah, and I think this is very much the theme that we see repeated today throughout the various panels. We had it also in the keynote speeches. The question is now, you were saying awareness has risen. We have really people understanding that there is higher risks out there. We need to address them. But how do we take them these next two steps? And it's nice that, you know, what you describe and what Iona described very much meet. And this is now, I guess, really the challenge. What will be interesting probably in terms of discussion next is how does regulation help or hinder to cross this barrier to bridge these problems. And I would like to turn to you, Dean, because, and I need to quote that, in your home state, Idaho, you pride yourself on being the least regulated state in the US. And you say very clearly on your website that you are still guaranteeing the highest level of consumer protection. It would be very interesting to hear that, because I'm sure, Petra, I hope you are not offended when I say that, but I think it would be a safe assumption that a European supervisor would not make the same statement. I think in Europe, supervisors would feel like they make the wrong statement when they say we have the least regulation of all markets. So it's interesting, you know, how do you look at it in the US? What makes you confident to make these statements, and how does it resonate on your end?
Well, believe it or not, there are actual organizations who count the number of words and regulations that are in place. So it's not something, when I took this job 6 years ago, that I thought that would be the direction. But just as we've been talking about with the insurance gap, we have regulation on top of regulation on top of regulation. We have confusing, archaic, duplicative words and regulations that almost compete at times. And so if we want our products and we want our industry to be more appropriately regulated, it's time to clean house every once in a while. In Idaho, we've cut, and by the way, our rules, just to give you a little context, rules are a document that administrates the law. They have to be approved by the legislature, and so you can't just write a rule and hope that they won't see it. I have to go every year in front of the legislature and explain any changes to rules that I'm making and get approval on the rules that are in place. And that's on top of whatever changes in the law are going to take place. We started seeing conflict and duplication, and then a lot of times, and no offense to the attorneys in the room, but it appears that sometimes the rules were paid by the word, so they were very wordy. And so we started looking for ways to reduce that. I remember when we started, and which, by the way, we cut about 40% of our regulations and rules. We did not change one drop of how we regulate the industry. In fact, we made it clear, more concise, and easier for them to understand, easier for them to follow, easier for the consumer to understand what the rights are. I remember we had one industry group that came to us and said, Dean, you're taking out all of this language, and they had a particular phrase they were concerned about. It was in the rules 6 times, and in the law, in the statute. So I said to him, it's in the statute. So my question to you is, how many times do I have to say it in the rule before you know that I mean it? They got the picture. They got the aha. So I think there, particularly if we're looking at the use of technology, if we're looking at ways to try and attract younger people into the industry, I think we have to look at how we say things, and we have to make it so it's easier to follow and easier to understand. So I'll just stop there.
Okay, just out of interest, quick comments from the other panelists, maybe starting with you, Petra. I mean, can you imagine that we, for example, looking at the PRIPS kit, we could get rid of all the duplications that we have identified 1 million times over? Could we think about getting more focus on cover, because we learned in the pandemic that this is an issue that people really need to understand better? Could we get more digital, maybe? This is another topic that we will talk about later. Your perspective.
So I think indeed what you said is going out as a supervisor and say we're the least regulated in Europe. I don't think that will happen. I think it's also difficult because in Europe it's not just one member state that is regulating, but we do it with 27. And I must say that in itself sometimes results in a lot more words in order to fit everything into language. However, I must say with Solvency II, we took a step to one framework, and I think we still need to look at the other framework, which is an important key, I think, here, the IDD. And very concretely, we'll get to it later, but there I think a move to paperless, or at least also paperless, I think is necessary in these days. But we are very conscious of how much text there is. I think it's a lot, and we actually had one of our authorities counting. We had less than banks, which I think was at least a positive, but it was a lot. So I think what we tend to do, and you saw that also now with the advice on digital finance, is that most of the time we say there's new developments. Can we go back to what we have? Can we see if we need changes, or given that it's a principle-based directive that we work with, can we still fit it in what we have? And I think we need to continue to do that. I think we need to be conscious that it is a highly regulated industry before we introduce more rules, or different authorities that also have rules. And here I'm particularly thinking of horizontal legislation and the AI Act. I think here we need to recognize that AI is already supervised by a whole group of supervisors. So I think here we can be more efficient. Then with what is there, and including the PRIPS kit, I think the idea originally was that more information, more transparency, and even more would help in customers make a good choice, and consumers be also like triggered to do more. And I think here we are more and more realizing that too much information is not good. So making it more specific, making it less complex, maybe also making in some documents a difference between professional investors and consumers that buy a product, I think will be key. I think intermediaries, agents will remain very important going forward, and need to think on how they can play a role in a digital world, because I think whatever the world is you sell it in, the role you have is very important in helping consumers make the right choices. And so finally, moving forward, I would say that we can look at this, but we need to also understand that too much information is not good, and particularly in digital, maybe layering here can help to help people digest the information. And sometimes we also need to look at some of the products and the multiple choices that customers are given and ask the questions, do they really need to make so many choices before they have a good product? Or is there also on the insurer side a possibility to limit the options? And I'll stop there.
Yeah. What strikes me sometimes when I look at the challenge, especially at European level, when the goal often is to compare insurance with other products, that we are frequently running the risk that as insurance we are falling a little bit behind because the focus is so much on how other products are marketed that the key features that are relevant for insurance, like cover, like protection, are not really, coming to the fore.
Can I just, I fully agree, and I think one of the points here is that yes, there are also other non-insurance products. However, they are very often sold by insurance intermediaries. So I think that is why in all these discussions, and I think EIOPA very much tries to advocate that as well, it is important to listen to the concerns from industry, the stakeholders, the intermediaries, when new proposals are made, even though there are many other voices at the same table. And so maybe in number, they are less. But if you look at who is in the end bringing it to the consumer, it is the insurance intermediaries in many, many cases. So I think that is very important.
Yeah. Claudia, turning to you, from your perspective, how can we change to the better? Is technology maybe the driver that can help to, make things leaner, easier, understandable? Your perspective.
Well, yeah, technology is the big lever. So if we look into the very different levers we have to close the protection gap, I would say technology is one of the most important one. Why is that? Because it kind of addresses many of the root causes on the demand side. And what are these root causes? So we spoke about this. It's affordability, it's accessibility, but it's also important on the younger generation's appeal. So if we start with the first one, with technology, you can make things cheaper because you're more efficient, so your prices can go down, and then you reach more customers who said before, okay, for me, kind of the cost-benefit balance doesn't work. So if you're cheaper, you have a greater affordability. That's number one. Number two is kind of accessibility, and that's extremely important, in particular in markets that are not as mature as kind of our home market in Germany, but markets where you have a high percentage of uninsured people. So with digital means, it's way easier to get to them and to reach the unreachable, let's say, and give them the opportunity to buy insurance. Also, with the model of embedded insurance, you get way more kind of customers aware of the insurance you can offer. And then appeal, for me, is one of the biggest reasons in levers in mature markets, that your customer, let's say, is on her or his way to kind of the skiing weekend, didn't buy coverage, and we just offer this, it's a new product at Allianz. You do 3 clicks and you get kind of your coverage for 3 days doing ski holiday. So that's kind of the appeal. How easy is it for people to just do 3 clicks and then be there? Now, this comes with the flip side, that technology is such a big lever, and the flip side is we as a business have a huge responsibility to innovate, so to tap into these levers and come up with products that make it so much easier for customers. And we as Allianz a couple of years ago decided to set up a digital accelerator where we invest in startups and fintechs who kind of have the ideas and have the technologies to better understand what is possible and what we can offer to our customers. And as I just spoke about embedded insurance, so we are testing that with an investment in a company called Bima, and they are offering insurance in developing markets, primarily in Asia and in Africa, to kind of, via embedded insurance, increase the insurability and then close the protection gap. So knowing that the role of business is to innovate and the role of regulators kind of is to ensure that this innovation is fair and overall kind of fair, accessible. We need to do a lot to stay relevant, and the meaning of relevant is being innovative.
Yeah, and your point about embedded insurance, clear trend, we hear that a lot now. You know, you don't buy the insurance product, you buy the product that is insured. So very often that is now the edge that people take. Iona, we heard a lot from Claudia now about the new ways that companies think about it. Would you assume that that helps to reach the younger generation, these kind of new ideas, embedded insurance, new strategies to...
Yeah, absolutely. Technology is pivotal if you want to reach that younger generation and if you want to get them thinking about their finances. In the UK, we're considered by most standards a centre of excellence when it comes to financial technology, and I think open banking has not yet realised its potential for insurance technology, but I very much hope that in the future we'll see this ecosystem where young consumers can access reliable, trustworthy insurance companies and brokers through their banking app. And I think that is more likely to be their first point of contact with insurance rather than going to their bank or building society, because here in the UK there are lots of rules and concerns about how much advice you can offer consumers in that context. Just to kind of, because I'm aware that we're short for time, I just want to quickly touch on financial influencers. I've been called a financial influencer, but it's not a term that I'm particularly keen on, partly because here in the UK, we're a bit further along in terms of looking at the risks of commission and how they can create perverse incentives. And we had a piece of regulation introduced in 2014 called the Retail Distribution Review, which banned commission on most products sold by financial advisors, not insurance. But it has led to financial advice generally becoming more expensive. And most people who access professional financial advice in the UK have just got large sums of money to invest. They're not your typical young person, in other words. So young people are going online, they're getting their information from financial influencers, some of whom are excellent, some of whom are terrible, and there is a great spectrum in between. And unfortunately, there's a real wild west in terms of lack of regulation of the online space. Whether regulation is even possible with the online space is a much bigger debate that we can't possibly have here. But I think the specific risk that exists in the insurance space is that, you know, influencers can get away with saying whatever they want and doing whatever they want, whereas insurance companies are bound by very tight regulations around what is guidance, what is advice. These terms, you know, they mean one and the same thing to normal people. You know, people out there in the real world, they'll go, well, guidance is sort of the same as advice, isn't it? In the UK, it's like, no. Financial advice, you have to pay for it. It comes with a recommendation. It has all these regulatory, you know, safeguards in place. Whereas guidance is just telling you what you could do with your money, but it's up to you, and we've got no kind of liability for it. The vast majority of consumers do not understand the difference between the two, whereas influencers can just give out advice on all sorts of products. There are really great examples of insurance brokers in the UK who are, you know, raising awareness of insurance in a really fun, accessible way. I can think of one who's a young woman who's she dresses up as Superwoman in her videos, and she does skits to demonstrate that actually she's not really Superwoman and things go wrong in life, and that's why you need protection. She's got a really dedicated following. But there are so many more influencers who just don't discuss protection because they're not aware of it and they're not actually that financially literate themselves. I'm sorry if there are any other financial influencers in the room here. It sounds like I've got a big downer on the whole financial influencer culture. But I think it's just because there are so many people out there who are giving pretty misleading and unhelpful advice. Where the insurance industry can kind of rise above that is to suss out which influencers actually know what they're talking about, and it helps if they actually work in the insurance industry or are experienced financial journalists. But also they can really tap into a national conversation and look more at national campaigns that don't just rely on kind of viral social media advertising, which in the UK is very often associated with quite unscrupulous practices and can lead people towards, you know, third parties that will bombard them with inducements to take out insurance that are not appropriate for their needs. Lead generation is a big problem with UK social media that we haven't tackled yet. So yeah, the insurance industry can rise above that, work with respected, knowledgeable influencers and insurance brokers and journalists to raise the profile of insurance, but also look at those national campaigns where we're not just relying on gimmicky adverts, but we're actually tapping into a conversation that people are having about issues such as the pandemic, such as what's going on in Ukraine, such as flooding, and all these things that people are worried about in the back of their minds. So yeah, financial influencers, they're both an opportunity and a threat, and the insurance industry kind of has to understand how to use the opportunity as best they can.
This is really interesting, this perspective. Very quick reaction, Petra, Dean, from your end, the whole sphere of financial influences. We had also...
I guess I would just jump in a little bit, and I think this, respectfully, this is where we can be penny wise and pound foolish. The inference that commission harms consumers is, I think, a faulty assumption. And to move away from licensed, trained, expert agents to influencers, albeit unintentional, is folly. They have no, an influencer has no ability to, or no responsibility to be accurate. They have no responsibility to care for the consumer. At least in the United States, I don't know how it is elsewhere, but the agent is trying to build a book of business. He's treating consumers right in order to get referrals and be able to help consumers. He's there at the time a claim needs to be paid. An influencer isn't going to be anywhere near that. And so any system, any effort that moves away from agents towards influencers, I think is to be absolutely candid, in my humble opinion, is fraught with disaster. So.
Yeah. Do you agree, Petra?
Well, what I would say, first of all, is I think that it's two separate discussions. So there is the inducements, commissions. We just provided an advice on that, and we did not make a choice. I think it's a very binary discussion right now, particularly in Europe, with the Commission thinking about retail investor protection. I think it should not be binary. I think that, yes, there are examples of a ban, but there are many, many examples where it's still there and it's working well, but there are concerns. And I think having a discussion on how to deal with the concerns while, and also being conscious of the impact, because in every market that will differ, on if you introduce even a cap, I think that is necessary. And I think in our report we very consciously did not choose, and we were happy that we didn't have to. It's a political decision, but we very clearly indicate where the concerns are and what you can do about those, and that is not always a ban. So I think there is room also going forward without a ban. Having said that, with or without a ban or more rules for commissions inducements, influencers will keep talking and will keep saying things about financial products. And I think that in itself is something we as supervisors and our colleagues at ESMA are looking into that as well, because particularly now in the field of all kinds of coins, including Bitcoins, there's a lot happening through influencers. And I think that in itself is a concern. So I think besides having a discussion on commissions, we need to look at what can influencers do and not do when they are giving their advice, guidance, but at least they're being heard to a broader public.
I think we could easily fill another panel just with this question. Unfortunately, we have been running out of time. I think one of the solutions clearly, and that I think shows this panel, is to keep engaging and working together to advance, the mutual understanding, and hopefully this way find solutions. So I would like to invite the audience to thank our splendid and engaged experts for their discussion. And I would like to invite you then to join us for lunch and be punctually back at 1:30 here in the room. Thank you very much.
Thank you. Thank you. Thank you.